Hello, good evening and welcome to this wonderful session on financial reporting. The current topic is Schedule 3 Division 2. Some recent changes which has happened. So we are discussing that point. So please come to compliance with number of layers of companies. Have you done everything before that? Registration of charges. Okay, so we'll take registration of charges. Registration of charges or satisfaction with registrar of companies. So this some small disclosure is required, not very important, where any charges or satisfaction are yet to be registered with the registrar of the companies. So have you studied about charges in the company's law? So you have to get this registered with the registrar of the companies, and if it is not yet registered beyond the statutory period, then the company will have to give a detail and reason thereof. So I don't think they are going to ask you or test you on this. This is important because in our chapter Ind AS 110 we are going to discuss about layer of subsidiaries. How many layers are allowed now? Parent company, under that you can have 2 layers of subsidiaries, and if you have more than that, then disclosures will be required. That is compliance with number of layers of companies. So where the company has not complied with the number of layers prescribed under clause 87 of section 2 of the Act, read with company's restriction on number of layers rule 2017. So basically when you have got more than 2 layers of subsidiaries, then you have to give following disclosures. What are the disclosure requirement? The name and the CIN of the companies beyond the specified layer. So name of that company, suppose A, B, C, D. So this D is beyond the specified layer. Name of this company D, and CIN. I don't know what is CIN. Company identification number. That's good. So every company nowadays have got that company identification number. DIN is the director's identification number. TIN is what? Income tax. Taxpayer identification number. TIN or TAN? 10 is different. Anyway, that is not my subject. So company identification number will have to be given, and relationship or extent of holding of the company in such downstream companies shall be disclosed. So how many shares A is holding in D? What is the relationship between these two companies? All this will be disclosed, because you are violating this rule, company's restriction on number of layer rules. If there are too many layers of the companies, it becomes very difficult to track the activity of the company. You are the investor, you will invest in A will invest in B, B in C, C in D, D in E. So we really don't know where is my fund, and sometimes they are located in different countries also. So that leads to a lot of activities which should not have happened. Okay, this you must have read in that Adani saga, is it right? Hindenburg report. So many layers they create, and it is very difficult to identify from where the funds are coming. So same money is getting rotated and invested in the listed company, and the share prices are artificially boosted. Possible? Yes. So now the government will have at least some idea about from where that money is coming in. One good thing they have done is that now companies will have to disclose certain ratios which was not there in the earlier case. So therefore, you as a chartered accountant or a financial expert, you have to know the ratios now. You have to teach other people also these ratios so that they can read the balance sheet and understand the performance of the company, liquidity, risk involved, okay, long-term growth involved, etc. So which are the ratios you have to disclose? Current ratio, debt equity ratio, debt service coverage ratio, return on equity, all the important ratios, inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investment. If you look at these are really good ratios. Of course, you can suggest that they should have added few more ratios. That list is endless. We had a topic in FM, ratio analysis, and almost 40-50 ratios you have studied. Okay, so out of that, the key ratios, like for example, current ratio helps in understanding liquidity, debt equity ratio, understanding risk, debt service coverage ratio, whether company can pay the interest and installment out of this profit or not. And of course, as an investor, we want to know how much return we are earning on our equity investment. This inventory turnover ratio, trade receivable, these are working capital ratios. How the company is managing its working capital, what is the liquidity, okay, what is the utilization of the resources, all this you get to know. Same thing for turnover ratio. And this net profit ratio, return on capital, return on investment is the efficiency, performance. So all these ratios are required by the investors to take the decisions whether to invest in a company or not. Then not only that, for people who are not from the finance background, they have added one more line. Companies are also required to explain the item included in the numerator and denominator. So they have to write down in numerator what is written, like in current ratio, which all current asset item they have included, which all current liability they have included for computing the above ratio. Otherwise, again, you can fool the people by putting something or not putting something, right? And if there is any change by more than 20% compared to last year, then that also have to be explained. So if current ratio was 2 and suppose this year it becomes 2.50 or 1.50, so the change is more than 25%, to disclose why this change has happened. Now matters which require consideration on ratios. So these are some opinion we have added. The above requirement for disclosure of key ratios is welcome. Welcome for better understanding and analysis of financial statement. It's not there. This is just a commentary, you can just ignore it, not required. Is it there, cash flow? I have also in the previous slide added the commentary, but not required. It's not a part of the schedule 3 division 2. So let us go to next 22 number paragraph, cash flow related ratios, ratio derived from cash flow statement of the company. There are two important statements company prepares. One is statement of profit and loss and one is statement of cash flow. In Ind AS we call it statement of cash flow. In accounting standard we used to call it cash flow statement. Profit and loss account is prepared on accrual basis, but cash flow statement is prepared on actual inflow and outflow of cash. It has been observed that companies are showing higher profit, but they don't have enough cash flow. So now the company also will have to give some ratios relating to cash flows, like current cash debt ratio or cash coverage ratio, that is net cash flow from operating activity divided by average current liability, whether your cash flow from operating activity is sufficient to pay your current liabilities. So that ratio will help us to check ability of the firm to pay its current liabilities out of the cash flow generated from operating activities. Then cash flow coverage ratio, which means cash flow from operation divided by total debt, which measure the solvency of the company, that is ability of the company to pay the total debts. These ratios are really important for understanding the solvency of the firm. Can the company pay its debt on time or not? Is it right? Company can pay debt only if it generates cash. And it is always better to generate cash flow from operation to make payment of your liability, not borrowing from one source and paying the other one. So these ratios communicate the effectiveness of a business operation and demonstrate the solvency. Whether company will be able to survive in the long run or not, whether it will be able to pay its long-term and short-term debts or not. Next point is compliance with approved scheme of arrangement. So this is related to your company's law arrangement, section 230 to 237, when company go for some kind of restructuring. So where any scheme of arrangement have been approved by the competent authority as per section 230 to 237. So what are the disclosure requirement? Again, not very important because it's more of a legal compliance. Company will disclose that the effect of such scheme of arrangement have been accounted for in the books of account as per the scheme. Okay, so that means in the scheme usually they mention how the scheme will be given effect in the books of account. So you have to mention whether the scheme have been complied or not, that it has been complied as per the applicable accounting standard. If there is any deviation from the scheme of arrangement agreed, that will have to be explained. Now next is additional disclosure in notes to P&L account. Very dangerous item coming now. Hold your breath. Undisclosed income. Undisclosed income means reconciliation of income tax in Companies Act. I have not seen any company disclosing that, but again let us see. As time will pass, we will understand. Companies will give details of any transaction not recorded in the books but has been surrendered or disclosed as income during the tax assessment. So what will be the effect of this? This will also affect my another standard Ind AS 8, which has one item, prior period item. After some days we will discuss, because if you have not disclosed any income and now you are disclosing, it means it is not this year mistake, it is a mistake of previous year or previous years, and therefore it will require retrospective application, and one additional balance sheet will have to be prepared. Because if you are saying yourself that I have not disclosed income, means it is an error or omission. Error or omission will have a retrospective adjustment. Okay. So what are the disclosure you have to give unless there is an immunity for disclosure under any scheme? If government says okay, you have an immunity from disclosure, don't disclose, then enjoy. Otherwise you have to state whether the previously unrecorded income and related assets have been properly recorded in the books of account during the year. Disclosure of the above information. Now government said you disclose undisclosed income, but how as a user you will look into this aspect? You will be happy to note that your company is earning so much income and we are not aware about it, or you will doubt on the integrity of the management. You will doubt on the financial statement that you were reading so far. You don't know whether last year was right, wrong, at least. So this will help them to understand the impact of undisclosed income, and also to understand and evaluate the appropriate recognition of undisclosed income in the financial statement of the company. That is, to what extent your income has got affected in the earlier year, current year, and what will be the tax implication of that. In fact, you don't have to you have to pay tax plus penalty and some interest, etc. also, and it will really put question mark on the integrity of the management. Disclosing such income means getting further money from investors will become very difficult. Okay, nobody would like to invest in a company which have got undisclosed income. Then we will discuss CSR disclosure. What is the full form of CSR? Corporate Social Responsibility. Which section of the Companies Act deal with that? Section 135. And now companies have to mandatorily transfer some percentage, 2% of their net profit, average net profit, okay, for CSR activities. Government is saying you are earning so much, why don't you contribute something towards the society also? So either you can contribute directly, do some activity directly, or you can do it through some other organization. And if you can't do anything, then Prime Minister, some fund is there, na? Yes, you can give. That is also part of CSR expenditure. Prime Minister Relief Fund and so many funds they have specified. So where you can invest, and that will be treated as amount spent for CSR activity. So disclosure requirement are, first you have to disclose how much amount is required to be spent. So there is a formula in the Companies Act, 2% of your net profit, average net profit, and then you have to check how much you have actually incurred, and if there is a shortfall you have to disclose. Then any total of previous year shortfall you have to disclose, reason for shortfall, and then what are the nature of CSR activities you have undertaken. You have to give a brief disclosure of that. And if there is a related party transaction, so you can have your own NGO also through which you can contribute. That means you can just transfer money from company to your related party NGO. That is what happens. Is it right? Don't write anywhere. The purpose of bringing this section is that now you can give donation officially to all these NGOs managed by political parties. Is it right? And then they will again use that money for some election funding or something, but that is not to be mentioned anywhere. Details of related party disclosure, and they are forcing you to make that payment. It's requirement. So you have to disclose any payment to related party, contribution to a trust controlled by the company in relation to CSR expenditure as per the relevant accounting standard. So that is now an official channel to siphon of the funds from the company. So in some cases, not every time. Where a provision is made with respect to a liability incurred by entering into a contractual obligation, the movement in provision during the year will be disclosed. So if you have created any provision, movement, opening, addition, deduction and closing balance with respect to that provision will be disclosed. And one more paragraph I will discuss is details of cryptocurrency or virtual currency you have to disclose. This area is a grey area in India. There is no legal clarity on this. Is it right? Because RBI tried to ban cryptocurrency, but I think Supreme Court said no, you can enter into this transaction, but there are regulations. We are not interested in that right now. If the company enters into transactions relating to cryptocurrency or virtual currency, some example of cryptocurrency on the right side, some of them don't exist also anymore. They have got wound up and investors' money have gone into water. Is it right? Some value was $30-40 and it became $0.01 or something. So have you played in cryptocurrency any time? No. Very good. So Bitcoin is the most popular one, and then because of that some other came: Ripple, Litecoin, BitShares, Stratis, Dogecoin, Zcash, etc. Okay. We don't know what is this item. Is it right? Whether it is a intangible asset or financial asset or a derivative, because there is no underlying. It is just based on demand supply. You are playing with that. So you will sell to B, B will sell to C, C will sell to D, and the amount will keep on increasing, and finally the last person will be holding it. Is it right? Anyway, so what companies have to do, if they have traded or invested in cryptocurrency or virtual currency during the financial year, the following will be disclosed. So let your user also know that your P&L account contains profit made out of cryptocurrency. Business is to sell steel, and P&L account contains profit from transaction in cryptocurrency. So then the investor will ask you the question mark, that is it the purpose for which the company was formed? So profit or loss on transaction involving crypto and virtual currency, an amount of currency held on the reporting date. So you have to also specify how much cryptocurrency you are holding, and if you have received deposit or advance from any person for the purpose of trading or investing in cryptocurrency, even that will be disclosed. So let your user know that you are doing this activity also. Right, wrong is a very debatable issue. Okay. One homework you will do today, you will read the annexure A, which is the bare text of division 2, plus one more homework I had given earlier. You will read the guidance note on schedule 3 on page number 2.13. Just have a quick reading of it. The question which you can expect in the exam would be a numerical question where you will be required to prepare balance sheet, SOCI, statement of profit and loss, notes to account, or maybe based on some recent amendment they can ask you some question. Okay, but beyond that usually they don't ask question from this topic. Is it right?